Bitcoin has been consolidating sideways for 2 full months. In today's video, we're going to be discussing why this consolidation range is nearing the end, the key levels you need to pay attention to, the short-term and macro targets, as well as why the altcoin market cap is preparing for a parabolic move. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope everyone's having a fantastic day today. In today's video, we're going to be diving deep into the current price action for Bitcoin, discussing what is happening, what you should be expecting, and why this current 2-month-long consolidation range is nearing an end. We're also going to be taking a look at the macro charts, and more particularly the altcoin market cap, and why we are about to see a potential parabolic phase begin. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us over on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us over on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chat and education chat, our news, our help, our trade setup, and everything else we have to offer. If you are interested in joining, contact us via the pinned comment of the free channel or click these links to find out more information. Let's go ahead and jump on in. So today's video is going to be jam-packed. We're discussing the short-term 2-month-long consolidation range. We're going to be going into detail in regards to this range and why it is the final consolidation range before a potentially explosive rest of 2024. We'll be discussing the significance and the key levels you need to be paying attention to. We're going to be going over the short-term analysis with what is happening right now in Bitcoin's price action, and we're going to be discussing exactly what you should be expecting next. We're going to be moving over to our macro charts, discussing particularly the total cryptocurrency market cap, Bitcoin dominance and why we expect that to fall, and of course why altcoins are preparing for a potentially parabolic rest of the year. So let's go ahead and get stuck in and starting on the market data. Market data 24-hour volume down 8.93%, sitting at 103 billion. 24-hour liquidations sitting at 8.72% in the green, 104 million. Of the 104 million in liquidations, 66 million have come from long positions and a total of 37 million have come from short positions. Taking a brief look at the short-term price action, we can see within the last 24 hours, we haven't had all that much movement. We've seen a decent amount of chop toward the upside and the downside. Currently, not all that much movement as we can see. So we have seen liquidations on both spectrums. We'll come back and discuss what is happening in massive detail in later part of the video. Moving over to the DXY is still sitting above that 105 level, which is going to be this area of support. We can see we are still testing this area. We have not managed to continue upwards yet. If we are looking for a continuation, we would need to break above 106.5, this local high point, and then expecting a continuation to retest 107. Until then, we are seeing some developing weakness as the RSI is starting to drop down. We do have short-term lower highs developing on the price action, which does indicate we do run the risk of losing this area of support. And if we do lose that area, we are looking for a retracement to our area of confluence between our neckline of support and our 2-month-long uptrend. If we do retest this area, it is very likely we would, as a consequence, see the RSI break down, see that negative momentum shift, and see the DXY crash quite significantly. This will be very bullish for risk assets. Moving over to the broader markets, the S&P 500 has managed to close the weekly candle above the 5,000 major support. Again, like we said, any correction that develops that remains above 5,000 should be considered a healthy high time frame correction. Only if we fail to remain above 5,000 on the weekly would we see an extended correction to retest our high time frame area of support, which happens to be the 2021 all-time high. Until then, we are expecting retracements and continuations to the upside on the macro. The same goes for the Dow Jones, again retesting its critical area of support at 38,000. A loss of 38,000 would result in a retracement to the 2021 high. Until then, any correction should be considered healthy. With that being said, guys, let's go ahead and jump into the crux of the video, jumping into Bitcoin. Before we do, a quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump over to Bitcoin. So taking a look at the current price action, as you can see, Bitcoin has been consolidating now in quite a higher time frame range, about a 20% range for the last 2 months. This consolidation range began at the start of March as we broke above 60,000 and reached a high point of 73,800, which marked at the current 2024 all-time high. The range has resulted in numerous retracements and continuations to both retest our range low and our deviation high, but ultimately we are still within the range. The biggest question is this range coming to an end soon? And if so, are we going to see a continuation upwards or will we see a correction lower? So to simply answer that question, we need to identify the developing strength within the price range we are observing. So going over to the daily chart, we can see that we do have our RSI. Our RSI again is a leading indicator. It represents momentum, which is again a degree of strength in the price action over a specific period of time. What we can see since we broke into the 60K region, we have had momentum decreasing. So from this orange line onwards, we can see momentum has been falling while the price range has been consolidating sideways. This, of course, is an indication of exhaustion, but exhaustion does not always indicate weakness. We do need to see, again, for weakness to develop, key structural high time frame levels of support be unsustained for the price to continue toward the downside. At the moment, what we are seeing is consolidation with decreasing momentum and sideways price action. This is actually quite healthy. For the price action to continue upwards, we would need to see the momentum in this period, and the momentum, again, a reflection of the strength since we broke into that 60K region, we would need to see the momentum flip positive. If we do see the RSI break out of this red downward diagonal trend line, we would see a positive momentum shift, and that would facilitate a continuation through our short-term resistance and upward to retest our range high. Now, if we do retest our range high with positive momentum, that would be the first time we have retested that point with positive momentum, and we are very likely to see a continuation through that region. If we go down to our smaller time frame chart once again and take a measured move of this consolidation range, we can see the measured move from our range low to our range high and apply that to the range high breakout, we would see a move that would take us into the $80,000 range if we were to break above our 73.8K trigger, which is our deviation high and our macro continuation trigger point. Again, for this to happen, for the continuation upwards into this range to happen, we would need to see the daily RSI break out, and by breakout, the RSI works on pivots. We would need to see a daily candle close and which would result in the daily RSI pivoting and closing above that trend line. That is going to be confirmation that the market is regaining strength, and we're seeing significant strength that could push the price action upwards to retest our range high again. A very fundamental and key thing. Until we see that occur, until we see that daily RSI break above, there is always going to be downside risk. Once the RSI breaks that trigger point, the probability for a upward continuation significantly overpowers the probability for a downward continuation. As of right now, we are in a short-term uptrend, and we are expecting this uptrend to continue to retest the price range midpoint, which is the dotted trend line at 66,000, as well as the confluence point between the dotted trend line and the short-term downtrending diagonal trend line represented by the black line. However, on the higher time frame, until we get that daily trend line flip, there is a chance we could see a correction back to retest our sell side liquidity, but like we've said before, even if we do see another retest of our sell side liquidity, it is very unlikely we drop any lower unless we see a 4-hour candle close under. So worst case scenario is another correction. For that correction to validate, we would need to see a 4-hour candle close underneath our sell side liquidity, which is 59,100. That would result in the price range gapping this VRPV gap, okay, filling the VRPV gap and potentially crashing to 52,000. However, like we've said already, the probabilities of that move are significantly lower than the probabilities of continuations upwards as of right now. The only reason why we are mentioning it is because it is not off the table yet. It is still a possibility, and while it remains possible, we have to identify a plan to prepare and execute in case that possible scenario actually plays out. But like we said already, guys, if we do see that RSI break upwards, we are likely going to see a continuation higher for Bitcoin. Jumping down to the shorter time frame price action on the 2-hour, we can see once again, we do have this downtrending diagonal resistance, which again is going to reflect the overall price trend since the 8th of March. So looking around 16 days, we can see this is a key trend line, which represents the downtrend we have been in. And for us to enter a uptrend, we would need to break above that trigger point. Breaking above that trigger point subsequently would result in that daily RSI breakout. So we do have double confirmation on the short term and the higher time frame, which would confirm the fact we would see a higher time frame continuation to our range high. Moving down to an even smaller time frame on a 15-minute chart, we can see within the last 24 hours, we have had a hell of a lot of chop in the price action. As of right now, we are forming some sort of descending channel formation. We have struggled a fair bit in the last couple minutes to break above this level. However, what we can notice if we do take a look at our momentum, we can see the RSI is attempting to flip positive here. However, it has not had much luck yet. For a downward continuation, we would need to take out this sell side liquidity on the price action around 64,200 to 64,300 to confirm a continuation back down into this lower range at around 63,400 to 62,800. So at the moment, we are expecting continuations higher, provided this area of support holds. If we drop below this area of support, we could see a correction back down to 63,400 to 62,800 on the short term. But again, if we do zoom out and look at that in perspective, that really isn't that much of a correction on the short term, and we would still expect a continuation upwards. So that is a short-term analysis. Those are the key levels you need to pay attention to. Let's go ahead and jump over now to the total cryptocurrency market cap. So moving over to the total cryptocurrency market cap, the total cryptocurrency market cap is looking fantastic. And what we have seen here is, of course, is a weekly correction. We've seen a few weeks of red now, taking us back down, but we've come down to a very critical point. And this point is going to be our dead cat bounce high of the prior cycle. We can see we have come back down and perfectly retested this point on the weekly chart, bouncing significantly from here. And if we were to summarize this chart with 2 words, making it very simple, essentially we are macro bullish above this resistance and support area, and we are macro bearish below it. We have to keep it nice and simple. That is how we identify. So macro bullish and expecting continuations higher while we remain above, and we are macro bearish expecting continuations lower while we are below. At the moment, support is support until it is not. So we are expecting this area to hold a support, and we are expecting continuations upwards provided we are able to maintain this level. So overall, looking fantastic. Let's go ahead and jump over to Bitcoin dominance. So what we can see on Bitcoin dominance is, we talked about in yesterday's video that generally when we enter the parabolic phase of the bull market, altcoins significantly outperform Bitcoin. We'll explain that in today's video. So we do see Bitcoin dominance significantly fall down. And with that correction in Bitcoin dominance, eventually Bitcoin does reach a top, the cryptocurrency market reaches a top, and that generally occurs when Bitcoin is in this 40% range for Bitcoin dominance. What we can see for Bitcoin dominance is Bitcoin dominance has just retested a major neckline of resistance. This was once support and it has now turned into resistance, and this is going to be a perfect potential reversal point for Bitcoin dominance chart, and we'll discuss why this is significant in a moment in regards to altcoins, but we can see that as we come up and retest this prior area of support, now resistance, we definitely could see a correction for Bitcoin dominance, which could spark that downward continuation into this 40% region, which could trigger a alt season. Again, if we do break above this level, expect altcoins to continue to bleed against Bitcoin, but this is going to be a major macro reversal point for altcoins to start pushing upwards against the Bitcoin pair. Moving over to the altcoin market, this is significant based on where the altcoin market cap is currently sitting. This is the total 3 market cap excluding Bitcoin and Ethereum, and what we can see that we are in stage number 4. Stage number 4 is simply defined as the initiation of the bull market, moving into stage number 5, which is the parabolic phase. Within stage number 4, we generally start to see Bitcoin dominance fall down, and it aggressively tanks when we enter stage 5. But also within stage 4, we generally see a weekly correction, which lasts around 30%. We have seen that already for altcoins, and most importantly, that weekly correction results in a retest of our high short moving average and low short EMA of the Pi cycle indicator. You can see we retested that point perfectly over here. And if we look at the current price action, we actually came down and retested it once again perfectly. So what we are seeing from a structural perspective and a technical perspective is that the altcoin market cap is not only gearing up for a potentially parabolic push upwards from a structural perspective, but from a technical perspective, we are sitting in the same situation we have seen prior to that 2021 parabolic phase. Now partner that up with the fact that Bitcoin dominance is sitting at resistance. If we do start to see Bitcoin dominance drop, we definitely could see the total 3 market cap significantly gain and continue aggressively upwards through point number 1, entering the parabolic phase. So to identify the key points, point number 1 is our yearly point of resistance. This yearly point of resistance acts as a trigger point for point number 5, meaning when we break above point number 1, we enter point number 5, which is the parabolic phase. Obviously, we see altcoins going absolutely ballistic, okay? Point number 2 is the bear market resistance. Anything below point number 2, we are in a bear market. Bear market accumulation for altcoins. Altcoins continuing down aggressively. Point number 3 is going to be once we enter the bull market. This is the start of the bull market for altcoins. We have a weekly consolidation above point number 2, testing it as support. Point number 3 is the transition into the parabolic phase, where altcoins start to gain significantly and develop macro higher lows moving into the parabolic phase, as well as has a final massive flush out. And point number 5 is the parabolic phase, which we see massive growth across altcoins, a comparison to Bitcoin moving into point number 6 as the all-time high. So everything, all the puzzle pieces are lining up for altcoins here for that parabolic rally, and it is definitely something you need to be paying attention to. Now, moving out from all of that, we of course need to focus on the macro charts, and the macro charts are very significant for Bitcoin, but it's also important to note there are more things that move price action than just technicals and structural, right? Technical indicators and technical analysis is simply the analysis of buyers and sellers, because buyers and sellers move the price action. So if you want to understand where the price action is going next, particularly on a macro scale, there is no point looking at the price action. You have to analyze what the buyers and sellers are doing, more so how the perception of future events impact the buyers and sellers in current time, because the market is future seeing. So when we're looking at the macro scale and we're saying, well, will Bitcoin go up for another 6 months, another year? We have to understand what are actually the drivers pushing people to purchase the assets over a macro period of time. Interest rates, inflation, global policies and events, okay, economic and taxation policy, societal perspective, all of these macro drivers make buyers and sellers change or act in the market, which makes price action move over a macro scale. And the most important drivers is, of course, interest rates. And interest rates is so important as it controls the cost of debt and the strength of the dollar. And of course, as we know, if the dollar decreases in value, we see assets increase relative to the cost of the dollar. And more so when we see interest rates decrease, we see the perceived systematic risk in the market based on future risk, because the market is future seeing, decrease, and thus people try to position themselves early for potential risk decreases in a future date. And we have seen that over 2023 with the expectation that interest rates are going to drop in a future period. And with that expectation, it has cultivated a bullish environment for risk asset prices to continue upwards in anticipation of that eventual event, which is still expected. So all of which we said today is very, very relevant. But if we do see the risk climate change, and the risk climate is controlled by interest rates, if we do see the Federal Reserve come in and say, well, we're lifting interest rates again, or we're not going to cut interest rates, that will have a significant and profound impact on the macro price action for Bitcoin and the expected upcoming parabolic phase of this cycle. So yes, pay attention to the charts. Yes, understand everything is falling into place as we have seen before, but of course, pay attention to what is actually driving price action and making people buy and sell on the macro scale. Thank you for watching. Catch you guys in tomorrow's video. See you then. Have a great day.